following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Claremont. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. Well, you're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Well, yes, Tom, your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Disconcern the truth. The problem with making assumptions is that we believe they are the truth. We make an assumption, we misunderstand, we take it personally, then we react by sending emotional poison with our word. This creates a whole big drama for nothing. Market-wise, let's take a look at it out here. We have the Dow Industrials down 257. NASDAQ is down 9. S&Ps are down 18. Gold contract trading down $24.60 at $13.31. Silver off 30 cents, $16.41. Copper down 6.5 pennies, $3.18 a pound. Light sweet crude up 22 cents, $61.90 a barrel. Notes, 10-year note down 3 ticks, 120.15. 30-year bond off 11 at 143.28. King dollar up to 632 ticks, 89.645. The euro is trading at 123 3/4 to $1 US. The yen is at 107 1/4 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We got a round trip happening out here, folks. Bottom line is that you had the low of today at 27.09 inside the future market. The S&Ps had made it all the way back up to a price point of 27.37. Bottom line, 37 to 47, 27.37. Bottom line, they're going south coming into the close out here. Let me get this a little bit closer and see where we're at. So you're coming right back into the low that was established at 5 o'clock this morning. Someone just let loose on these futures. When you talk about letting loose, so picture, this is the first 10-minute buy. You're 9 minutes into it. They unloaded 34,000 contracts inside the S&P. We go over to the NDX 100 because the NDX 100, as well as the NASDAQ Composite, were the strongest out here. You take a look at that. They unloaded simultaneously inside the NDX also, and they did it up. They actually started earlier in the NDX. They did 11,000 contracts at the 10-minute prior. This one here, they're already at 12,700. The next one's going to be starting up. The IWM, let's go take a look at the small caps out here. Small caps. What do we do inside the small caps? Small caps pulling back, $1.36, 12 million shares. Now, that's light volume on the pullback. So bottom line is that we'll see how it tests the 150, 152, which is the high of the Wednesday, last Wednesday. That was the high of last Wednesday. Gold. What do we get with the gold contract? They slammed gold out here. Got it down 25 bucks. You get 350,000 contracts. Bottom line, that's you get an expansion. Well, you don't have an expansion of volume. It's coming into less heavier volume, but bottom line, the bottom of the strength was 13.19. The high of the low was 13.24. Both of those are game. That's how those are setting up right now. If we go to the GDX and we take a look at the equities out here, you're going to see the GDX. Now, this is pulling back on dramatically lighter volume, which is really positive. The GDX is down 61 cents. You are at $21.89. I expect this can test 21.68, and that is also the high of the low that was generated out here on the 9th of February. So volatility, yeah, you have it all over the place. It's gonna, I suspect it's going to be staying out here for a bit too. 10-year note. Now, this is the one you want to keep your eye on, because what we have had is this. You've had the 10-year as well as the 30 not get a bid in 2 months. For 8 weeks, it's been going south. What that's all about, of course, is that higher rates, lower prices, no buyers. I expect we're going to get some kind of, well, you're going to get a bounce. You know, things just don't go down forever or go up forever. What we have right here now, we'll see whether the correlation, so the correlation inside the market itself was taking conniptions when, in fact, the rates basically start moving higher. You know, we almost hit 3% inside the 10-year. We hit 2.909. So you're 91 ticks. You were 91 ticks away from hitting that 3%. Not that the 3% is not some golden measure, but bottom line, higher rates. The market has been going south and having selling pressure because of that. So the correlation has been markets can go down, bonds could go down on price, up in yield. The way that the market is setting up right now, as the bond market, the way the bond market is setting up right now, it looks to me like we're going to have a bounce. What's going to be intriguing here is to see what ends up happening with the broader market as that bounce comes in. Walmart is the culprit today inside the Dow Industrials. Walmart's down 10%. Monster volume, that's down $9.96. You're trading right now 43 million shares. Is blowing away the swing points that had 14 million. You're almost into the gap that we're talking about in Walmart. This went topside when I come out with numbers on the 15th of November. It closed at $89.83. Opened the following day at 95. You are going to fill that gap. It's hammering into that gap. It has volume. As we hammer into that gap, and you know, if we come down tomorrow, like we've been today, 89 is game, and then you're dealing with 80 with Walmart. So you're dealing with some pretty heavy numbers on the way down. And for Walmart, that was a fast and furious move. No two ways about that. Amazon's a cut into their margins in a huge way. They brought their margins down dramatically. Not that they had big margins, but in order to basically compete with Amazon. GE's down 33 cents. GE's still in trouble. You get that high volume low at $14.23. I suspect good old GE is going to be running into that $11 level. Build some cars to get into that baby. Dow Industrials right now down 298. You get the NASDAQ off 21. S&Ps are down 23. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 285. You get the NASDAQ off 15. S&Ps are down 20. And Rite Aid. Let's go take a look at Rite Aid. So this morning, folks, what you have is, let's see. Okay. So now, Rite Aid trading $2.15. I will show you something. You bring this back. This is a cat with 9 lives. You know, this has been trading at $2 since 1999. $2 to $4. Well, let's see. Yeah, $2.50. So what you had out here today is that you have Albertsons, bottom line, making like they're going to take care of Rite Aid. So what you have, you get 2 dogs, Albertsons and Rite Aid. They both shouldn't be alive. Well, I love dogs, so we can't say that. But bottom line is that these 2 folks, what this is all about is that this is about a fund that had done a deal buying Albertsons, trying to get out of the deal, meaning, you know, now cash out. They tried to take Albertsons IPO. There was a failed IPO. How are they going to do it now? They're going to do it by supposedly buying Rite Aid, but what's actually happening out here is that this is a way that the Cerberus is going to be able to get their paper. They're going to get paper that they're going to be able to sell. And just to give you an idea of how bizarre this is, you know, let's see, it was about a year ago, well, maybe a year and a half ago. You had Walgreens that was going to buy Rite Aid. That deal was at, let me see if I can actually look at it, because that deal was coming across at like about $6.50 a share. Yeah, here it is here. Okay, so the first time it hit up there, so that was August of 2015. Hit $6.50, well, hit $9 a share. The buyout was $6.50. Do you know what there's been a couple folks that have analyzed this deal. What Rite Aid is actually going to get out of this deal, the stock's trading at $2.18, but the reality is that the shareholders going to get, let's see, I believe it's 18 cents, and they're going to get stock, let's see, yeah, the most they're going to get right now is 18.3 cents in cash for every share they own, but guess what? They're getting Albertsons stock. So you talk about a fast one, man, it's pretty amazing. Albertsons couldn't go IPO. No one would buy the paper. What way to do it? Okay, let's talk to Rite Aid. Let's sell Albertsons to Rite Aid. Albertsons has more stores, right? Maybe they can make it. Bottom line is that they're both going to go down the tubes. But guess what? Service is going to get out of its position because as soon as the deal gets done, now they're going to have paper that they can sell to get out of that position. Big number. Let's go over inside the Dow Industrials. That's accelerating on the way down. We'll see what's taking that baby south. Walmart, of course, is the big number. Walmart's putting 70 negative points into the Dow. You have Goldman putting 26. United Technologies putting 21. United Health's putting 20. There's only 3 stocks that are putting any type of positive inside the Dow. That's Intel putting 2 points in, Microsoft putting 1, American Express putting 0.8%. So right across all the 30 equities inside that Dow, they're basically taking it apart. If we do look at Walmart right now, Walmart's building cars to get that next leg down, to get into that gap. Walmart hasn't got into the gap yet. Would have to close under 94.72. You know, it's under that right now, but just barely. We're at 94.56. You close underneath that, and what you're going to see, it's going to be much easier for Walmart to go down the next, let's see. The next 5 points. And if we come down there and you have volume, then guess what? Then Walmart's, you're pushing at a 79 price point. If Walmart comes down like this tomorrow, you know, doesn't need 44 million shares, but if you come down on like 25, bottom line, then what's going to be wide open is $79. Because now what you have with Walmart is that you have an equity fundamentally that, bottom line, is having a tough time growing internet-wise because they're trying to catch up with Amazon. Their margins are getting crushed. Bottom line, you have volume off the highs. Volume off the highs is really dangerous in a huge way, folks. Let's go over to the XAU, the HUI. XAU out here. Now, this is pulling, it's $2, down $2.33. You're pulling right back into its strength from last week where we had 56 million shares traded. On Friday, we did have 56 million shares traded. What I expect you're going to see today, though, is that you're going to get a contraction of volume as we get into that level, and that's what you're going to need. Let's see. So Newmont, that has 4 million shares. Yeah, this is good. 4.4 versus 8 on its strength on the way up. And the reason I'm doing that there is that we can get the numbers inside some of the large equities that are inside the XAU and HUI. If we go to Barrick, Barrick is down 35 cents, 8 million versus 19 million, so that's not a bad setup also. And Eagle, that's down $1.42. This is not good because the volumes are not bad, but this not holding 41.56. Look at that. It went to 41.58. Okay, this is going to be dicey here. So, an Eagle, you had a high volume low on the 9th. Well, not really a high volume low. That was a rejection of December. You come off it with nice strength. We come down Friday with volume. Now what you need is a rejection of lower price, which we don't have yet. 41.56 is the number. We went to 41.58. When you say a rejection of lower price, what you have to get is that you have to come into it and you have to get away from it, not by 10 cents. In this particular case, I'd like to see it get away from it by a good 40, 50 cents. Let's go take a look at Rangel Resources. So Rangel Resources, that's down 195, trading $85.74. That's not a bad setup. Okay, that's what I would like to see an Eagle look like that. So this is coming into 1.1 million shares, and you're only done 348,000. That's how you want to be coming back into signs of strength. Let's go over and take a look at the, if you want to see something that's really pretty cool, natural gas. So natural gas, folks, is right now up, we're trading up 7 pennies. 263. Percentage-wise, what you're trading up right now is 2.93%. And this is how deviant natural gas is. So the natural gas numbers are going to come out on Thursday. The East Coast of the United States is going to be breaking records in an extraordinary way the next few days. Supposedly it's going to be up to 71 in New York City on Wednesday, and if it is that breaks all records by 3 degrees. Washington, D.C. is going to be in the 80s, folks. That's going to just blow away records if it's in the 80s. Pretty amazing. You stay right there, folks. We'll be coming right back. We have the Dow Industrials right now trading down 309. NASDAQ is off 22. S&Ps are off 25. We're coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018 placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now, the Dow is down 284, Nasdaq's off 14, S&Ps are off 21. And so Treasuries, the Treasury market had a pay up today for 3- and 6-month bills. This was actually the highest since 2008. Let's see how much they paid up. Okay, so the auction started today at 11:30 a.m. 51 billion in 3-year bills. That yielded 1.64%. That is 6 basis points more than February 12th. Remember, so it's 32 basis points, folks, make one percentage number, one. So that was 6 basis points. Let's see. 55 billion of 4-week notes at 1 p.m. had a yield of 1.38%. That's a big number, man. Okay, so picture, that's a 30-day note, and they're paying 1.38%. That there is the highest since 2008. 2-year notes yielded 2.25%. That's also the highest in 10 years. The demand is still there, though. That's the bottom line. So, and the way that you know the demand is still there is that they always say, what is the bid to cover ratio? And that means how many people are bidding for one bond or one note. And in this particular case, you still had, let's see, 2.74 bids were for every one. Let me see, what one was the first one? Every 6 month, no, every 3-month note. And on the 1 month notes, it was sorry about this, folks. It was 3.1. So 3 to 1, 2.74 to 1. There's still plenty of buyers. That's the bottom line. The real question is going to be how far and how fast are these trades going to go? Are we going to get a turnaround? And, you know, as this market basically keeps the volatility going, will people change their views? So the way that we have this shaken out today, it's 3:30. Right now, the NYSE is doing 501 million shares. So that means you're going to have a pullback with light volume. The composite's doing 1.4. So when we look at this, you're going to have a failure in price and volume again at the February 5th downdraft. That being said, what you also have is that you actually are pulling back with light volume, and you're going to need a lot more. Well, actually, not the Qs. So the Qs tested highs on light volume. So that's saying that can go south. The difference is the SPY, the S&P, is pulling back with dramatically lighter volume. You're pulling back with 57 million. You're going into 111. You're going to 120. So that's telling me that not quite yet. That this thing is going to mess around up at these levels, going to try to get into the February 5th higher level again, which is 275.85. I expect, yes, you're going to have a failure again. But this is the cause building, because if this thing was going to go south right now and go after the high volume low, which all the markets have, by the way, but if that was going to do that, you would see a good expansion in price, in volume rather, and we don't have it. The high volume low that we're talking about, that I suspect the markets are going to go after, is that February 9th low. Inside the S&P, it's the SPY, it's 252.92. You know, it's going to go for it. The real question is going to be how much cause does it build before it decides to go after that? And will that be a very large ABC structure on the way down? Let's go over to the XLF and look at those financials. So the XLF, which is really intriguing, is particularly where notes, bonds are going, can't get any traction. Now, you know, this definitely went into the February 5th downdraft again, which is $29.21, and this hit it perfectly, which is pretty sick. Couldn't handle it. So let's go to J.P. Morgan Chase. And the banks, by the way, should be making money hand over fist because of the rates, the spread inside the rates. J.P. Morgan, same deal. Can't handle the 114.59. We got to 114.39, gave it up, so that's rounding up the top. Bank of America, same setup. That's down 10 cents. Citigroup, same deal. Berkshire Hathaway, BRK. Let's see what Berkshire's up to. So that's off 98 cents. You're at 202. Yeah, well, Berkshire didn't even get a bounce going. Not a big one anyway. You know, we came up from a low of 189. You got to 296, 206 rather. Right now, you are trading at 202. Yeah, this is pretty cool. We just got a little update weather-wise because it is pretty wild. Yes, it's 85 where we are, Tampa, St. Pete. I was in the water yesterday, folks, for like a good half hour. It was gorgeous. I mean, it was so great. It was like you didn't want to get out. I mean, that's the type of we get summer. Not summer, but it's a great spring. It's already. And Pittsburgh is going to be Pittsburgh at 79 degrees right now. So that's pretty intense. And in Denver, it was 5 degrees. But it was sunny, I bet. Denver is always sunny. It's a beautiful thing. Let's go take a look at some of the higher volume stocks out here in this market. Excuse me. Walmart's the big one. That's down $10. You get Snap off $1.53. NXP. Let's take a look at this. So NXP Semiconductor, that's up $7.12. Qualcomm's making a run at them for $127. Bottom line, they have 28% of the vote behind them already. They need 70% to get it done. This, for Qualcomm, this is one way to get out of the arms of Broadcom also. Broadcom, bottom line, wants to take over Qualcomm. They both are $21 billion companies revenue-wise, meaning Qualcomm and Broadcom. NXP is $9 billion. So it's going to be a lot harder for Broadcom to take over Qualcomm if, in fact, Qualcomm can get their hands wrapped around NXP. I figure that's going to happen, and guess what? Good old Broadcom's going to be coming back at them in another 8 or 9 months anyway. But bottom line, I expect Qualcomm will get that deal done. And what that does for Qualcomm is that brings them, they're the kings of, phones. Bottom line is that NXP, basically, their main business is autos. Software and auto. So bottom line, that's where this is going, and it's going very quickly, folks, because what you do have is that these driverless cars, not only here, Google, their subsidiary, they're going to be starting in Arizona. Bottom line, driverless cars. That's a fact. It's pretty amazing. That was fast too. You stay right there, folks. We'll be coming right back. We have the Dow Industrials down 261. NASDAQ is off 6. S&P's are down 19. Come right back, folks.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 279. NASDAQ is off 16. S&Ps are off 22. Let's go take a look at 3M. So it's intriguing. 3M right now is down $1.96. You're trading 234. So this does have a high volume low. So that wants to get tested as the rest of the market does on the 9th. That's at 218. What's intriguing here, so let me just see. 3M takes in a fortune, there's no doubt. But they're in the middle of a trial, and they stopped the trial this morning. It looks like they're going to cut a deal. Yeah, that's change for them. Bottom line is that so they look like they're going to make a deal with Minnesota. And what the charge, what the allegation was, is that let's see, the state of Minnesota had sought a $5 billion payment for pollution over its Scotchgard ingredients. I believe this is like the little stickums. Bottom line is that this trial got stopped this morning, and now the headlines coming across is it looks like they're going to settle for $500 million to $1 billion. And if you do take a look at their numbers, bottom line is that they do $33 billion. So not a big deal. Domino's Pizza. If you want to see how Uber is basically taken apart the delivery business, let's go over to the Domino's Pizza. And what you're going to see is Domino's come out with numbers. Bottom line, stock goes all the way down to 208. Rejects the lows. Let me pull this up for a second. Rejects the lows. Turns positive. Now this thing is heading for the highs. Now what's going to be intriguing here is that you're going to get over the high of 221. Bottom line is that we'll see whether they can hold the price. You know, what you have, when I brought up the Uber aspect of it, the CEO, let's see, 60% of the sales are digital. Their tax rate is going to be 22 to 24%. They missed, when we bring this down, you got to picture something. Domino's, I remember when Tom Monahan's the guy that started Domino's. And I remember him, this is going back like at least 10, 12 years, maybe 12 years. I saw him doing an interview, and they had asked him, you know, something about how's the pizza business. He says, we're in the delivery business. And it was like such a heads up. It was amazing, okay? Because that's what he was really in. Now, they had their comp stores down. Inside this call, they're saying that now the calendar shift is going to help them in comp sales. What I suspect is really going on here, folks, inside the Domino's in general, is that the choice of how much we can get delivered now has gone up astronomically because of the Uber Eats. And never mind just Uber Eats. There's going to be, there is a lot more deliveries, but it seems that the aspect of only getting pizza delivered, only getting, you know, wings delivered, has changed dramatically, and it will continue to change. And the difference is going to, what you're going to end up seeing, which I believe you can see it on Uber Eats right now, is you're going to have restaurants that are opening that are only delivery restaurants. Because I've gone on the app a few times, even with Uber, to see, okay, are they open? They open. And what tends to happen is that if the main restaurants, so let's picture like whether it's an Outback or a Hooters or any of these, if these guys get too busy, they just turn off their Uber Eats app. That's how they handle it if it's busy in the store. Then you have the aspect of Uber Eats stores that are only delivery mechanisms. We're going to see a lot more of that, you know, because it's very easy to do. Because what ends up happening, all you do is this: you get the restaurant news, you figure out what gets sold the most, what has the biggest spread. You open the places not on Main Street, so your overhead's down. You buy used equipment in order to do it. Bottom line, you're in, you know. And there's always great restaurant equipment that is used for folks because so many restaurants go out of business. So that's going to be bearing on the Domino's deal for quite some time. Let's go over to Amazon, see where Amazon's at. Amazon today hit a price point of $14.88. The high's $14.98. Closing high, we might get, you know what, it looks to me today that, let's see, you get a closing high, $14.60. We might have a closing high today on Amazon. That's how this thing might shake out today. I believe the closing high thus far has been $14.61.76. Right now you're at $14.64.12. Now you're pushing into this with volume too. And see, this is going into a high volume high. So that baby wants to get tested, which is the $14.98. Guess what? It's going to get tested because we have a light volume day, and in the light volume day, what's happening is that you are pushing with volume into that high volume swing. If we go over to Google, different ball game in Google. Google right now trading at 11.02, and that's got to be another failure going into the February 5th area. 11.10, yep, is the number. So we hit 11.13 today. Your volume characteristic is 3.7 million. You're at 1.1. It's not going to make it. This is going to be, we're going to have some really good trading here the next 3 or 4 months, because this correction, to me, has only just got started. You can see I was pushing against that February 5th time frame. What we don't have going yet, we'll see how this works out, meaning as we back down, you're backing down with lighter volume today. That's saying to me that, guess what? It's going to go for the highs again. Not the highs, but the highs the last few days. As you go for those highs, if your volume contracts again, then that's saying, okay, now we're going to go downtown again, and all that takes calendar-wise is, I suspect, the way that we're shaking out right now, before you know it, we're going to be coming into end of the month, beginning of the month window dressing. And it looks to me like it's going to be after the March window dressing that, guess what, we'll have built enough cars up to go right after that low again. And, you know, March to July, yeah, I can see some downward action. The dollar, it's going to be interesting to see how this dollar shakes out. Actually, let's go to the yen for a second, because the yen is what moved the gold market last week. So the yen came off the low, too. Yen broke to 105.55. That's trading at 107.26. Yeah, realistically, though, anything under 108, that still wants to go to the lows down there at 99. If it jumps back inside 108.13, then it will have a shot to basically get to higher price. You stay right there, folks. We'll be coming right back. We have the Dow Industrials right now trading down 230. NASDAQ is off 2. S&Ps are down 17. We'll come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, as you come over to our website at TFNN, you are going to see right on the front page, Tigers Den, open house all this month. Come on over and join us. We have a great trading room. All the Tigers and Tigers are in there about 13 hours a day. Great ideas. A lot of folks from not only around the U.S., around the world. The way you do it, you come over to our website at TFNN, 30 days, absolutely free. So come on in, take advantage of it. We get nice volatility out here. Get a lot of great ideas about the markets, not 24 hours a day, but good 12, 13 hours a day. Inside these markets out here, so if we go over to the S&P and just take a look at the SPY once again, we do have the SPY. SPY, bottom line, sideways move out here today. 65 million shares on the way down. You're going into 111 million. That's it's not saying that you are going to be going down too much longer. So bottom line, would like you're going to see another push to get into this 275.85 area. And I don't expect we're going to make it up into it. But what you do have here is this. You get a failure in price and volume on Friday, all the indices. You came down today inside the Dow. You came down the S&P. Volume is way too light on the way down. Your NASDAQ and NASDAQ Composite, what they actually did is that they failed on price and volume again at the highs. If we go take a look at the characteristic of what we're going to get at the close out here, bottom line is that the NYSE is probably going to do about 900 million. And that's short volume in a big way. inside the composite. With the composite right now, we are probably going to do about $2 billion, and that's also light volume. So gold is a big number out here, and that's because of that. You know, they brought gold down good, coming down into its strength. Bottom line, more than likely it's going to test the bottom of that strength, and that has to do with the dollar index up 612 ticks. Now, the volume's light on the dollar index, but I do expect that we're going to test the top of that range, which is 90. Dow Industrials down 244, NASDAQ is off 2, S&Ps are down 17. You stay right there, folks. Going to be coming back with lots of numbers after the close.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Love is kind and just. When you're in love, a smile is always on your face. You feel good about yourself, and because you're happy, you are kind. Love is also just. When you make a mistake, you pay only once for that mistake. Market-wise, let's take a look at it out here. We had the Dow Industrials down 254. NASDAQ off 5. S&P's down 21. We take a look at the volume out here inside the NYSE, folks. What you had is that we came down with 852 million versus 945. Bottom line, you go over to that S&P. What that is that that's a low volume pullback. The SPYs did 78 million versus 167. And what that sets up, bottom line, this bounce isn't over yet. We go into the NDX 100. Now, if you want to see something pretty cool, so you had all the indices on Friday had failed on price, failed on volume. They were all going into the downdraft from February 5th. You had the NQs, the 3 Qs, NDX 100, and the composite all fail once again. The 3 Qs got to a high today of 166.68. You did 35 million versus 105 million. Versus on Friday, even 62 million. 62. So you get the failure there. Let's go to the IWM. We look at the IWM. IWM pulled back with 23 million shares, and you're coming into, oh, this is interesting. You're coming into 23 million and 36. So the IWM you can say that you failed, then you did come back with some volume. Dow Industrials, however, S&P, no, you pulled back down. So what do you have it? So we get divergence. The divergence would be that the NDX tested the high, failed again, light volume. That says it wants to pull back. S&P comes down, light volume. That says it wants to go test highs again. Dow came down, light volume says it wants to go test highs again. So what I expect you're going to have here, when you take a look at the calendar, we're going to be at the end of the month before we know it. This is the shortest month, of course. Right now, we're dealing with the 20th. Bottom line, before you know it, we're going to be at the end of the month. We're going to be at window dressing. I expect you're going to have to build some more cars in order to get to lower price. Some of the higher volume stocks out here today, you had Walmart was the monster. That basically missed numbers. The margins came down as it's trying to catch up with Amazon on the net. Walmart came down 10%, down $10.67, trading at $94.11. If we do look at Walmart, what you're going to see is that Walmart is now into the gap from its gap away the last time that it came out with numbers. Any close under 94.72, which we closed at 94.11, sets up this gap's going to get filled. The bottom of this gap is $90.85. I expect we're going to be down there tomorrow. He did 50 million shares in Walmart. Now, if we even come down with 25 million tomorrow, Walmart normally does all of 7 million, 8 million, 5 million shares. You start coming down into this gap with that type of volume, meaning even half the volume of today, you'll see this Walmart will get down into the $79 level. We pull this back, and what you're going to see is that the bottom of this strength here is 89. You break 89, then it puts game on for 79. So Walmart definitely has some challenges ahead for it. The number to really keep your eye on is this $90, because if we break the 90, then game is on for a much, much lower price on Walmart. And that is one monster hit for a stock that's so large. AK Steel down 15 cents. You had Apple off 58. Qualcomm was down 86. Qualcomm put a new bid in for NXP Semiconductor, $127. NXP was up $7, trading $125.56. You had Twitter down 22 cents. Applied Material, that was a winner out here today. That was up $1.73. Facebook down $1.35. If we go over to Facebook and we take a look at Facebook, Facebook looks like it's going to go after this high. Well, Facebook has a nice high volume low at 161. I suspect that 161 is game. Notes and bonds. So notes and bonds have been trying to catch a bid. Well, not catch a bid for 2 months. They've been going down for 2 months. We'll see whether this is going to be the beginning of some kind of a dead cat bounce, or does it have something more than that behind it? Because what we did out here today is this. Last Thursday, you had rejected lower price. Volume wasn't bad. We go higher, and we didn't have strength as we went higher on the Friday. Bottom line is that you came into this level, tested it again. Today we tested the low at 1.5 million contracts versus 1.8, and 1.8 is light volume because the bottom line that was breaking 2.8. So when you test like this, it's like, okay, now it's going to have a shot to have wide price spread, to have volume behind the move in order to basically see if it get a bounce going. That was your 10. If we take a look at the 30-year set up the exact same way. 30-year out here today got to a low of 143.14. This went up 16 points from that. We did 320,000 contracts inside the 30-year. That was going into 443, as well as 417. So you can see you went into it slightly higher high. The way that it looks to me is that we are going to basically try to get up into higher price, lower yield. Once again, the real question is going to be, is that just going to be a dead cat bounce, setting up a larger ABC structure down, or is it going to have some juice behind it? King Dollar. What do we have with King Dollar? King Dollar last week had rejected lower price. We are up 627 ticks. Now, this has volume that is anemic. You're going into 39,000 contracts. We did 17,800. That being said, I do expect you're going to get to at least the lows of the high of this last swing high up here, which is 90.005. The high is 90.450. But you can see it loses volume each and every time it tries to get any type of upswing going. Just contracts in a huge way. Dow Industrials finished down 254. NASDAQ off 5. S&P's off 21. Coming right back, folks.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow finished down 254. You had the NASDAQ off 5. S&Ps were down 20. And if you want to see, we get bizarre weather happening all across the country, folks. So in California, you see the power prices, this surge into the highest in 3 months. Why? Because guess what? They're getting a monster freeze where if we come over to New York and Washington, D.C., they are going to be breaking all records with temperatures 30 degrees above normal. And you're talking about in the 70s in Washington, D.C. No, 70s in New York, folks, and in the 80s in Washington, D.C. We get over and we take a look at this natural gas, deviant beyond belief. Natural gas is up 3% today, trading at $2.63 when fundamentally, the prices in the East Coast have plunged, and right now they're at an 11-week low. Wholesale power prices, folks, because guess what? I don't think they're going to be putting a lot of air conditioning on up there. They're just going to be grooving with that weather. Let's go over to our man, Mr. Andy Hecht, as we do every Tuesday and Thursday, and try to decipher this power market. Bottom line is it's pretty wild, there's no doubt. And, of course, don't forget, Andy has 2 great newsletters. He has his Daily Essentials, which is his daily newsletter. He also has the Technomental Commodity Report, which is his weekly newsletter. So the daily is a trading vehicle. The weekly is an investment vehicle. The way you get both of them is you come over to our website at TFNN. You go to newsletters. If you'd like the investment newsletter, go to investment. If you'd like the trading, go to trading. 30-day money back, both of them, folks. Great newsletters. Call in, talk to them every Tuesday, Thursday. Andy Hecht, what's going on? Are you cold or hot?
I got to tell you, it's freezing here.
Is it? Yeah, they're saying this is a big freeze where you are. Yeah.
26 degrees last night.
Wow.
That's cold for here. I mean, that's really cold for here.
Especially February 20th, right? That's, you're coming into the spring there, man.
We're coming into the spring. I mean, a couple more weeks of this, but I remember last year in the beginning of March, it was hailing out here. So, it's kind of par for the course. But this is crazy weather and crazy reaction from this natural gas market.
Isn't it? Listen, this morning, Tom and I were on. I saw across the Bloomberg that it was going to be 75 in New York. And I said, 75? And natural gas was up. And then this just came across right before I come on, this story here. Because what they're actually showing, folks, were showing what the prices, when we talk natural gas or, big oil, most of the time you're talking about what the electric companies are buying it for. And right now, it's dirt cheap in the East Coast, and it's really expensive where you are, man. That's really the other side of it.
Out west.
Yeah.
Just wild markets. I mean, look, a lot of stuff going on. We had listen, the dollar got pretty oversold, and we had a bullish key reversal in the dollar on Friday on very low volume. And we had a bearish key reversal in gold on Friday, not on particularly big volume. But, they're following through today, no question about it. But we're having the stock market come down. We're having the bond market come down. It's a continuation of volatility. These markets are not really trending in the short term. They're bouncing all over the place, and you got to be careful out there. That's the bottom line.
Yeah. No, listen. Yeah. So talk to me about gold. I mean, it's going to be interesting here, right? I mean, it came down hard.
It's going to be interesting. Look, it's got a whole 1309.
Yeah.
That was the low we put in back on February the 8th. Silver's got a hold, $16 or so, but silver's a crazy one. Actually, silver wasn't as bad as gold today. Platinum actually held the $1,000 mark, which I thought was pretty impressive. I think gold, although it was heavy volume today, it's like a washing machine here. I still think gold's going after its high. It's going to make a new high. It's a question of where it comes from. Very interesting. Something I want to show you here. The silver-gold ratio.
Okay.
So I want to put a chart up here, a monthly chart, because we're really at the highest level here since February 2016. Now, February 2016, gold and silver kind of looked lousy. But then we know what they did the rest of the year. They exploded to the upside. So the fact that this ratio is right up here, and there is a little bit of seasonality in March for silver.
Okay.
It could be, in a process of making some lows here, and they will be higher lows. So I'm still positive on these precious metals. I think there's a lot of uncertainty out there.
When you say seasonality in silver, meaning that it comes into lows, there's less demand?
Yeah, it comes into lows in like February. I think it's the Indian wedding season is around this time. But that's what's happened over the years. I've always seen silver kind of do well in March. In the period March, April. So we'll see what happens this year. I like them. I think this is a buying opportunity, but we shall see. I think you got to be careful, but because we do have a lot of volatility in markets. I really like what I'm seeing in the grains. You know, soybeans broke to the upside today.
Okay, so that's up 0.4%.
But it got above. Right. It got up to
nice.
1039. Yeah. Closed on the lows, of course.
That's all right. Yeah, but it got this is a got away from that. I closed right at it. Oh my God.
Closed right at
1037. Right, and right at the swing point also. 1037 and a quarter was the swing. It closed at 1037 and a half.
Yeah. Unbelievable. Lumber, new highs. New highs in lumber, 517.50 it traded up to today. Amazing. It's the highest price in history for lumber. So, what's going on there? We got NAFTA concerns. We got new home building. So, we do have some bifurcation in the commodities markets here. We have kind of strength in the energy. Certainly natural gas. Oil was up a couple of ticks today. I don't think we're getting the, because of the holiday, I think we'll get the APIs tomorrow.
Yes. Right, that's yeah.
So, we'll get those inventory numbers. They probably grew. Last week, we saw an increase of 7 rigs, bringing the number up to, let me take a look, 798. That's 201 more rigs than last year. We produced in the United States over 10 million barrels of oil in January, and I'm sure we'll produce that much or more in February with the number of rigs rising. So,
well, is it 10 million barrels a day?
A million barrels a day.
Yeah, a day. No,
yeah. On average.
The month, right.
Oh, sorry. No, yeah. Well, the monthly average was 10 million barrels per day.
Big numbers, man.
That's a big number for the U.S. Right. That's a huge number for the U.S. So, we're kind of in a period here with the stock volatility and with the dollar kind of bouncing off the lows. And Tom, the precious metals are trading tick for tick with this dollar.
Oh yeah.
I mean,
no doubt.
That's it, and more so with the yen, which is down today. So
and the yen bounced too. Let's go to the Nikkei for a second. So I want to look at this Nikkei because what happens, folks, is that as the yen gets stronger, bottom line is that the Nikkei can't handle it either. So we're down from the highs at 24,000. We're at 21. Went sideways last night. Nikkei. It's laying there with a decent high volume low at 20,950. So this yen is,
Who knows what the next news story is going to bring for any of these markets? That's the bottom line.
You stay right there, folks. Andy and I are going to be coming right back. We had the Dow Industrials finished down 254, NASDAQ off 5, S&P's down 20. Coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking to our man, Mr. Andy Hecht. We're talking markets. We're talking commodities. And, of course, don't forget, folks, Andy's got a great show every Tuesday, Thursday, 5 to 6 Eastern Standard Time. Now, the way you can get all the programming at TFNN, one of the easiest ways to do it, too, folks, go to YouTube. At the search bar, just put in TFNN Corp. It'll pull up. You can hit Listen Live, or you can do the archives, either or. You hit Listen Live, then subscribe. It doesn't cost anything to subscribe, but the difference is if you do this on your phone, you're always going to have us right on your phone. It takes 2 seconds. You hit it, it comes up. It's awesome. We're talking with Andy. We're talking about commodities, folks. You know, hey, so let me ask you. It's February 20th, right?
Uh-huh.
We got wheat, we get soybeans, you get corn. You know, corn out here today, that's trading at 373.
Right, on May. I'm still looking at the March contracts till they come off because this roll is going on. So 373 on May, 365 on March. These are at highs.
Yeah, right.
You know, they're all strong. What I like about the wheat here is the Kansas City wheat is trading at a 22.5-cent premium to the Chicago wheat. Usually a bullish sign.
Okay.
For wheat. Now let's talk about soybeans for a minute.
Soybeans,
this is important.
okay.
I have the monthly chart up of the soybean crush spread.
Yeah.
And those are the economics of taking a soybean and putting it in a crusher, turning it into meal and oil.
Okay.
The price of soybean meal has exploded. So let's take a look at that. And that's why the crush spread's gone so high. We've gone from $330 a ton in the May contract back on February 6th to basically $380. That's a huge move. Massive move.
Yeah.
Now, this is going to affect, soybean meal is the basis for animal feed.
Okay, I see.
So this is going to affect the cattle, the hogs. This is going to, and if this continues, you could find animals going to the slaughterhouse a lot earlier this year. And that would mean, because the ranchers, the animal protein producers, they'll say, oh, if these feed prices are going up so dramatically, I'd rather just put them into the processing plant early so I don't have to pay for the feed. Now, what does that do? That will create a short-term glut, okay, of beef and of pork. But it will also create a long-term shortage. So you'll have cheap meat probably going into the grilling season because, you know, it can be frozen and so on and so forth. But, you know, next year this time, you could find yourself having some real shortages of beef. So load up the freezers if that happens.
Now, when they do that, do they still put them into the feed lots before they do it? Except they just don't want to basically feed them for another 6 months before they have to
They
put
don't
them
want
into,
to, right? They don't want
before
to
they have to put them into the feedlots, right?
Right. They don't want to pay. They put them right into the processing plants, and we saw that in 2012.
Yeah, no, I remember the last time
when grain prices went to the moon, you know. And listen, I've been reading a lot about this potential for a La Nina this year.
Yeah.
And a La Nina could mean very dry conditions over the southern tier of the United States.
Well, we're certainly getting some weird weather, so that's game.
Yeah. Listen, we've been getting weird weather since since those storms. That first storm hit Texas last year.
Yeah, yeah.
And it's listen, it's really really strange. I know you guys are having beautiful weather down there.
It's gorgeous.
I know, that's a beautiful thing.
Yeah, it is a beautiful thing.
It's a good thing for spring training. But spring training started yesterday.
Oh, yeah, it's wild.
Sox, the Yankees, we're all there.
We're all down here. Come on
and
down.
Listen, Tom, I have to tell you, I'm really hoping that the Tampa hockey team faces off in the Stanley Cup against the Vegas Golden Knights.
Wouldn't that be cool?
They're the two best teams in hockey with the best records.
It's pretty wild, and they're both in hot jurisdictions.
It's right. And listen, Vegas Golden Knights are an expansion team, first year, never before.
That's so cool, man.
82 points, unbelievable.
Now, who owns them? Is it one of the gambling guys that own them?
Foley, a guy named Foley owns them. And he's not a gambling guy. This town is loving the whole thing, and it's it's really nice. And the practice center is right down the street from where I live, and they practice every morning 10 a.m. They all live in the neighborhood. It's really nice because it's a small community here. So
sure.
Really, really good for Vegas. Then we're going to get pro football eventually, but it's a good thing. I like hockey. Hockey's fun.
Oh, hockey's great. There's no doubt about that. Great. And so Wynn, it's going to be interesting to see what happens with Wynn. I mean,
I think they're going to change the name of that company to Encore. I think that makes sense.
Encore. Oh, yeah, that because one of the hotels are named Encore, folks. Yeah, right.
And it's the brand, and it's a good brand, and I think that's what's going to happen. And we'll see if it makes it on its own. But I'm sure MGM and Caesars and some of the other big and Las Vegas Sands, they all are kind of sharpening their pencils and seeing what they'd like to bid for those properties, because those are very valuable properties.
And what's going to be interesting is that they're going to end up competing with them again. I mean, he'll do a third trick. There's no doubt. Do you know what I mean?
Steve Wynn?
Yeah.
Yeah, he will. He's getting up there in age though, but
he's got the
drive.
He's got the land too.
He's got the land. He's got the drive. Listen, he's certainly not going to go poor. He owns a lot of stock.
Yeah. Well, it's interesting you just brought up the stock. So the stock, folks, this is going to be tricky for Wynn. If you own Wynn, you got to be careful, because what can happen is that the regulators can make him sell the stock.
Yes.
So if they do, bottom line is that we'll see whether it's going to be a fire sale. Because do you remember, Wynn made his partner, when the partner sold the stock at 70 cents on the dollar. Remember, he had this big, he had a partner, I think, in Macau, China. And remember, there was a big fight going on. Yep. Bottom line is that Wynn
forever.
Yeah, and Wynn won, and they sold that out.
A comma, Tom.
70 cents on the dollar. Yeah.
Comma.
I know.
So what goes around comes around.
Heavy, man. Heavy.
It does. It does. And I'm sure he is not going to sell it for 100 cents on the dollar either.
Yeah, no. Well, the thing is, it's going to be the regulators' choice here. That's what I was just reading this article today. This is what's really intriguing about it, actually, because they don't want him owning 12% of it. It's probably a regulatory deal.
There's a lot of politics and casino business here in Las Vegas. There's no question about it. And around the country. Yeah. Very, very tricky business, and very, very political.
No doubt.
Highly political.
No doubt.
So we'll see what happens. I mean, that stock, listen, that company makes good money. Those are beautiful properties, and I don't think they're going to suffer. We are seeing kind of a very buoyant economy here in Las Vegas.
Oh, it makes sense, man. I mean, give me a break. When people have money, they want to go to Las Vegas and blow it, right?
Well, Las Vegas, they want to blow it. They want to go to the shows and the clubs and that's why. Now they have sports. That's the thing. The hockey's bringing in. I read an article. The hockey is actually bringing in a tremendous amount of people who are coming to see their local teams play the Knights.
Oh, that's cool. That makes sense. If they're going to go out there. Yeah, and what happens, folks, is that the hockey towns, they're big gamblers. New York, Boston, Philly, Pittsburgh.
Oh, they could come here and put money on the game. They could go crazy.
Yeah, you're talking about big gambling towns.
It's amazing.
Andy, thank you so much, folks. And you stay right there, folks, because, of course, I'm going to be coming back. Andy's going to be coming up at 5 o'clock, 5 to 6. Have a great one. Have a safe one. Of course, we look forward to the show, Andy.
Thanks, Tom.
Thank you. Stay right there, folks. We'll come right back.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archived workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We know we get cold weather out north, out west. We have spring and almost summer weather in the northeast. So let's go over to that crude contract. Crude's trading 61.65. This got to 62.65 out here today. Look at that. It has juice behind it, too, though. Okay, it's a new contract. But bottom line is that, yeah, the way this is trading, this is saying that 62.65 can get tested again. Let's go to the XLE. We take a look at the oil and gas equities. Now, this has come off the high, and this has been basically saying for quite some time, just as it did in 2014, that oil's going to lower price. So the XLE came off its high of $78 January 24th. You have a high volume low from the 9th of February of 64. This failed on price and volume today. Yeah, this is leading the charge lower. This 64.45 is game on the daily. And when we put this on a weekly, what you're going to see here is that it's a monster consolidation that's basically, that is still in place. And now that swing low of 61.80 from August of 2017 is game, but larger number looks like the highs of the lows of 2016 is game. That's 56 bucks. If we go to ExxonMobil and we take a look at Exxon, which is the largest weighting structure inside the XLE, same setup. Exxon tried to get to it did get to $77.44 today. Gave it up on price, gave it up on volume. We put this back further. Oh, yeah, you're going to see this thing. This thing's barreling into its swing on a monthly, 387. So watch what's going to probably happen here. We have all of, let's see, amount of trading days left in this month. 6. So you get 6 trading days left in the month. With more than likely, you're not going to get down to the low of 66.55. Yeah, I don't see that happening with Exxon. But what you have is this, is that you have an expansion of volume on the monthly basis in February. You're stopping before the $66.55 because we're $10 ahead of it right now. The top of that bar was 79, we're at 75. More than likely, what you're going to see, you close somewhere where we are, you're going to build some more cars, it's going to go after that swing point, and then you're going to be dealing with a 56 number from 08. Because it looks to me that the actual 08 number wants to get tested once again. Let's go to Chevron and take a look at Chevron. Now, Chevron had been much stronger than Exxon. Chevron right now is set up the same. Chevron came off the highs of 133. You're at 110.98. You put this back. This failed the high of 135. We got to 133.88. What the difference is that Chevron actually is not coming down on volume. So price point, yeah, it just went from 125 to 108. You're trading 110. So Chevron does look like it'll still hold price, which is going to be kind of intriguing. That's how that seems to be set up. Walmart has huge problems. You know, bottom line is that the spread, the margin spread came down dramatically. Walmart went down $10.50, $10.67, did 51 million shares, closed in the gap. The gap that we're talking about is from the November 16th and November 15th. When you close in the gap, folks, bottom line, it's going to be really easy to fill that gap, which is down another $4. And in Walmart's case, you talk about a hit. That is one monster hit when you have an equity that is, number one, you know, still taking in, listen to this, they take in $500 billion. That being said, bottom line is that they're not growing. You know, they took in $476 billion in 2014. On 2019, they only plan on taking in $511 billion. When you look at their growth structure, where the growth is there, but yet it's not a huge number, is membership and other income. That's up 10% over 3 years. They're trying to basically get a few more smaller items in, but that's not going to help them. Sam's Club's not growing at all. You have Walmart in the U.S. They are growing about 1% per year. And 1% per year, just so if you want to see your correlation, absolutely doesn't fly. If we go over to Amazon, Amazon closed at $14.68. This is an all-time closing high for Amazon. It does have that high volume high of $14.98, which I expect is going to get tested because you pushed with volume today, and this is a low volume market. When you do take a look at where Amazon is, just to give you an idea of why Walmart's having such a tough time, Amazon in North America, folks, is growing at 9% a year, or 28% over 3 years. Internationally, they're growing 17% in 3 years, basically 6% a year. Their web services, check this out, their web services in a 3-year rate is growing at 55%. You know, you're talking about, well, oh my God, you're talking about 19% per year. And you know, you're talking a monster business. So North America, they're doing $106 billion, and they're growing at 9%. Internationally, they're doing $54 billion, and they're growing at 6%. And the web services, of course, are growing at 19%, and you're doing $17 billion. So they have their work cut out for them. And what I do expect you're going to see is, you know, Walmart can put, and they probably have put a decent web presence together, but Amazon is off to the races. Amazon is a different ballgame. Every day that you get up, Amazon is selling something else, moving something else, cutting their logistics prices pretty dramatically. If we go over and we take a look at UPS, you can see UPS bottom line, they're getting hit, and that's getting hit in the aspect that Amazon's going to be using a lot more of its own vehicles, including planes. UPS has just gone down 30%. UPS was trading $135 in January 18th. It's going after its high volume low from February 9th. Now, what's going to be cool about watching it, UPS, is to see if we break that low and do you have volume on the break. UPS has not been able to get any type of bounce going. Let's go to FedEx and look at FedEx. FedEx has a problem too. Yeah, FedEx, you know, it certainly doesn't have the same problem that UPS does, meaning it's got smoked, but it's not down, you know, 30%. We're down from let's say 274 to 240. It's about 10%. It does, though, have a high volume low. These high volume lows from February 9th are going to get tested. It looks to me like the first one will be that UPS. More than likely, we're going to see that tomorrow. Dow Industrials finished down 254. NASDAQ off 5. S&P's off 20. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So when we take a look at this market, what you had is this. You had all the markets last Friday fail on price, fail on volume as you were coming into the downdraft from February 5th. And the S&Ps, that's 275.85. The differential out here today is that you had the NDX 100, the NASDAQ Composite, go into the same area with light volume and fail on price and volume again. So what that sets up, you have the NDX 100 Composite, they want to pull back. That being said, because of the way that we pull back today inside the Dow Industrials, meaning anemic volume, that's telling me that the Dow and the S&P want to go for it once again, meaning want to go for, you know, the Dow got to 25,432 on Friday. It was testing the high of the 5th. It failed on price and volume. What I think you're going to see here, bottom line, this is going to reject lower price because the volume's dramatically lighter. It's going to go for the highs of Friday once again. I'm not talking about the highs, which of January 26th. I'm just talking about the highs of Friday. And I suspect we will get a failure on price and volume. If we bounce around here another 4 or 5 days, that is we're going to be bouncing into the end of the month, the beginning of the month window dressing, and that would be the ultimate setup if you think this market's going lower. And the reason being is that this would be the building cause aspect of where the market is. You have a positive bias at window dressing. That being said, guess what? The windows just may start getting broken after that fact. Because if you remember, we came off the highs. Last time we came off the highs, that was also window dressing. Bottom line, the 31st, you know, we made the high on the 26th, 31st. By the 2nd, that acceleration started on the way down. We may get that same type of setup. You stay right there, folks. A man, Mr. Andy Hex, coming up next. And, of course, always remember, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it, step into it, take ownership of it, and fly with it. Thanks for being here, folks. Look forward to speaking right back here, 8 o'clock tomorrow morning. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.